Here on Good Morning Quad Cities. But first, let's get your weekly stock market recap. The S&P 500 up 0.7%, the NASDAQ down 0.6%, and the Dow Jones Industrial Average is up 2.1%. And you don't need me to tell you that the toll that the high inflation rates have had on our budgets has been very real. But what we did want to find out today is how the retail industry is coping. The U.S. Census Bureau is reporting that sales among the U.S. retailers rose just 1.5% over the last 12 months. This is one of the lowest annual gains in retail sales over 3 years. And financial advisor Mark Gravicheski is joining us now to talk more about this. Good morning, Mark.
Morning to you, David. Great to see you again. Happy Monday.
Yeah, you as well. So let's talk about this. So how has high inflation impacted the retail industry?
Well, retail sales or retail stores, do have their own kind of unique set of challenges. Obviously, they're facing much higher operating costs. Those day-to-day expenses needed to keep that business up and running. But, labor costs, David, are up almost 20%, since, before the pandemic. The cost to purchase their inventory has soared. Shipping costs, warehousing costs, utilities, all higher. But higher interest rates, though, David, means that bank loans to grow their business or to purchase equipment or inventory, that's also more expensive. So everything now costs a lot more to keep that business open.
Right, but unlike us, businesses can charge more to help offset that inflation. So to what extent are you maybe seeing that?
Well, this environment does create this, I get you, almost like a vicious cycle, David, where, higher costs are kind of, passed on from one entity to another. Now, producers and manufacturers, they face higher costs, and those higher costs get passed on to retailers. And obviously, retailers then have their own set of higher costs. And ultimately, this stream of higher costs, gets passed on to the consumer in some form of higher retail prices. But really, the extent those higher costs get passed on to the consumer does vary significantly. For many retailers, David, especially, I guess you can call them your local brick and mortar stores. There's this tremendous price sensitivity in their ability to raise prices too much. These stores are already competing against the big box retailers and online shopping giants like Amazon, who have the technology, the economies of scale, the resources to already inherently keep prices low, and they can absorb the impact of high inflation and rising interest rates a lot better than your local mom and pop retail stores.
Right, and we oftentimes look at retail sales data as it gets released. So what are your thoughts on that new report that was just brought out?
Yeah, the latest report released by the U.S. Census Bureau on Tuesday. There has been this gradual decline, David, in the year-over-year increase in retail sales. In June, retail sales were just 1.5% higher than they were a year ago, as you previously mentioned, one of the lowest annual growth rates in about 3 years. But also, what's important to remember, David, is that retail sales data isn't adjusted for inflation. So with an inflation rate at 3%, David, that means that on average, consumer prices are now 3% higher than they were 12 months ago. So if the dollar value of retail sales has only increased by 1.5% over the last year, that means that consumers are actually buying fewer goods and services than they were 12 months ago.
Well, and just looking at that graph, we're seeing that those retail sales really slump. What are you expecting to see over the next 6 to 12 months?
Well, David, where there is a broader consensus, so to speak, on Wall Street is that the economy is weakening. We've clearly seen that over the past few quarters. Now, all things considered, consumer spending has held up fairly well over the past 12 to 24 months. But a lot of that spending, David, has been at the expense of consumers taking on a lot more credit card debt or actually pulling money from their savings or retirement accounts. And really, how much longer can that last? It's not really a long-term viable solution. Now, where there is disagreement on Wall Street, David, is if this tipping point will ultimately take the economy back into another recession. There's currently about a 50-50 split on Wall Street on whether we do or we don't go into another recession. But if we do, David, the general sense, so to speak, is that any recession would most likely happen later in the second half of this year, maybe fourth quarter of this year, and maybe even into the first quarter of next year.
All
But we'll
right.
keep our fingers crossed we can avoid it.
Right. Hopefully, yes. Thank you so much, Mark. We'll see you again next Monday.